Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, April 29th, 2010. Well, rally on Wall Street, folks, as the markets try to negate that Tuesday tumble in the markets where we dropped about 225 points on the Dow. We're slowly coming up to the negation of it over the last 2 days. Yesterday was a flat to slightly positive day. Today we're having a sizable gain across the board on the SPY, on the Dow, on the NASDAQ. In fact, the NASDAQ is higher by almost 40 points. The Dow is up 144, and the S&P 500 is up about 17.5. That's basically 1.5% across the board. Now, again, we have a little more to go. As you can see right here, this would be official gap fill / high resistance from the day of that big tumble. You can see this is where we closed on the day prior to the tumble. We gapped lower, rallied up into that gap fill resistance, tumbled sharply, sold off, and closed at the lows of the day. The next day, again being yesterday, we gapped up slightly, retested the low of the day right here, and then rallied off the lows to close slightly higher on the day. Today, again, a gap up above resistance. Please note that, folks. You had this resistance right here, this resistance right here. We gapped above both of them. The river theory or the stream theory produces a sizable gain probability there based on the fact that you're gapping above resistance. It's the same in theory of taking a bridge across a river instead of going through the river. You have a lot of energy to continue higher, and the markets have continued higher throughout the day, as you can see. Up, sideways, inside bar consolidation underneath the 200 moving average, then a push through this level. This was a major level right here between 120.40 and 120.55 to 60 level. This area right here, a very tremendous level. You got above it, pulled back into it, and then continued to chop sideways to higher the rest of the day so far. Markets, again, are coming into the 2:30 p.m. time frame, and right now, again, are trading just off the highs of the day. Volume today is extremely light, folks. I can't stress that enough. The last couple days, we basically did 300 million on the SPY. So far, with about an hour and a half, just over an hour and a half left in the trading day, we have only done 134 million. For those of you that are Research Center subscribers, you know that when the markets, again, have no volume in them, they tend to go higher. And it's very amazing to see this because, for instance, if you take a look at the big down day we had, we did about 350 million to the downside in volume on the SPY. Today, we're getting a large portion of that back, coming up into the negation of that, and all you have traded is 134 million. That continues to tell you that the institutions are not the ones buying here, obviously, driving this market higher. They're the ones that were selling here because, again, they make up the majority of the volume. So when you have a high volume day, most times it is the institutions either selling or buying when you have high volume. If you don't have high volume, chances are it's the retail investor trying to catch up in this market and play a little catch-up ball. All right, so that's where we stand right now. Markets, again, if they go up, they'll have sizable resistance at gap fill pivot high from last Tuesday, and again, that would be at 121.32 or we'll call it 121.30 to 35 level. If you get through that, then you really have a good probability of going to 121.50, and then after that, you could easily see the highs here at around 121.90 and ultimately 122.12 being the pivot top, double top, 52-week high from just about a week ago or so in this market. All right, on the downside, very unlikely this market sells off sharply, although anything is possible. The reason I say that, again, volume is just a little too light. Let me zoom in again, and you can see, again, volume just continuing to get cheaper and cheaper or lower and lower here in the late afternoon session. The market's continuing just to float slightly higher and move up into that next resistance point. Again, that resistance point being at around 121. Let's see, 121.30, yeah, right around that 121.30 to 35 level will be the key level to watch. All right, so that's where we stand right now in this market. We'll continue to follow it and see how it progresses. The leading stocks today, what are they? Let's take a look. Apple Computer, after a couple sharp down days, Apple Computer fought back today, up about $8. That's a very nice gain on Apple. You're seeing buyers come back into this market with a vengeance on Apple Computer. In addition, Goldman Sachs and JP Morgan. JP Morgan was a hot chart and alert on the long side on the daily chart. I even highlighted it in this video to you guys the day after, and I just want to show you again. This is how technicals work. These are the types of alerts that go out in the Research Center. As you see, you take your October high, connect it right through, and that gave you a little pivot low right here at that line. In addition, you have the 200 moving average. We gave this as a long play in the Research Center hot charts and alerts. Sure enough, $1.50 later, $2 later, that's where the market's trading on JP Morgan. $2 gain across the board. Beautiful gain on JP Morgan, and there are more like this coming out every day. In addition, we gave out a key small cap today, has already run 30% on since the alert was given out in the Research Center hot charts and alerts today. The money just continues to build up and up in that Research Center for $49.99 a month. Insane not to go for it, in my opinion. All right, Goldman Sachs is also having a sizable bounce here. As you can see, you didn't quite get to double bottom levels here on the charts, but you got close. You came down just as they were getting kind of grilled in front of the Senate on Capitol Hill the other day. The chart started to turn up, and you got some buyers coming in here. Speculation is that Goldman Sachs was buying its own stock there and pushing it up to kind of negate the fact of negativity on that. And again, one of the only stocks on Tuesday when the markets got crushed to actually close higher. And again, thoughts are that Goldman Sachs was in there buying their own stock. Chevron is having a huge day. While Exxon had earnings this morning, Chevron again is recouping any losses from Exxon on earnings. Exxon again missing earnings by a little bit, but again, most of it was on the charge for healthcare reform. Sure enough, Chevron is just ripping higher here, guys, continuing to soar to the upside. As you can see, up almost $2 on the day, closing in on a double top area of resistance right up here, right around the 83 level, folks. 83, 83.25 will be good resistance on Chevron in the coming days, all right? And again, we'll be giving out more hot chart and alert updates every night, guys, so please be aware of them and continue to watch and see where they go. All right, big money to be made here. Lastly, I just want to touch base on a couple other things. Let's go to the 60-minute SPY here. I want to show you something on the 60-minute. Interestingly enough, as you can see, we've gotten back above this trend line. This was a major trend line right here. We came right up into this pink line and have now gone sideways to higher. Not an in spirit of bull flag. I just want to make that clear. A lot of people would mistake that for an in spirit of bull flag. It is not an in spirit of bull flag. In fact, it does not have any sort of relation. In fact, it's sometimes of a pullback little pattern there, but I just don't think the volume's heavy enough to give a pullback. I think ultimately you're going to go right up here. This is that level. This is the 121.30 to 35 level. That's going to be your major little bit of resistance. As you can see, this pivot before the big drop we had. All right. That's really all for today. Again, we'll see you in the Research Center nightly video tonight as I give you guys a 40-minute nightly video of hardcore technicals and plays and trades and swing trades. And again, keep an eye on those hot charts and alerts for the next 30% winner on small caps or the next big gainer like JP Morgan. Take care.